Today we are talking all about student loans. For the millions of students who need to borrow in order to pay for their education, it is essential to understand the financial aid system. By the time I finished grad school, Chris and I had accumulated nearly $75,000 worth of student loan debt, which I'm happy to say we have now completely paid off. So, student loans are a topic that we know a little something about. In this video, I'm going to share with you what I feel are the most important things for you to know before you take out a student loan. Please note that in this video, I'm not going to be talking about repayment, deferment, or anything that happens after you graduate. I'll cover those topics in a separate video. All right, let's dive in. Hello everyone, I am Sam. Thank you so much for tuning into our channel, Earn More, Spend Less, and Invest the Rest. We are a young channel looking to grow, so if you like this video, we would be super grateful if you would subscribe to our channel. Let me begin this video by saying that I truly believe the most important investment you will ever make is your investment into yourself. And for many of us, that investment includes some sort of educational qualification that is going to allow us to have a higher earning power in the future. After all, the first step to achieving wealth and financial freedom is your ability to earn more than what you spend. In order to be competitive in the job market, a college education or a professional qualification is a necessity for many of us. Another reality of life is that most of us do need to take on some sort of student loan or debt in order to cover the cost of education. In fact, Investopedia reports that today, nearly 54% of students have to borrow money in order to pay for their education, and the average amount of money borrowed is just under $38,000. So this is an incredibly important and relevant topic for many people. Let's get started with point number one. The first thing that you need to know is that student loans are debt. Student loans are debt, just like a car loan or a mortgage. Depending on your personal situation, different borrowing options are going to be available to you. Now, student loans are regulated, but you need to understand that it is not a one-size-fits-all system. You are the collateral for this debt, and your future earnings are what will pay it back. And because of this, student loans can usually not be canceled. Understanding the details of the loan. Like with any situation involving taking on debt, it is your personal responsibility to understand the terms of your agreement because these may vary. You need to make sure that you read the fine print. So let's take a few moments to break down the specific aspects that you need to understand. Interest rate. The interest rate of a loan is how much it will cost you to borrow the money as a percentage of the loan. It is calculated one of two ways, simple or compound. Simple interest takes your loan amount, let's say $10,000, and calculates the interest one time. If your interest rate is 5%, your total interest on the loan will be $500. Compound interest, on the other hand, which is much more common for student loans, charges interest for the duration of the loan and is calculated annually. This is where it gets scary. If you borrow the same amount, that $10,000, at the same rate, 5%, but it compounds annually and you make the minimum payments, which in this case would be about $106 a month, your total interest paid over the course of the loan jumps to $2,728. It's also important to note that you begin paying interest from the day that you borrow the money, not from the day that your repayment starts. This is usually the beginning of the semester or the quarter in which you borrow the money. Many loans will allow you to defer your interest payments while you're in school, and then they add it on to your lump sum after you graduate. But you also have the option to start paying your interest while you're still in school. So if this is an option for you, you could take advantage of it in order to save a little money in the long run. Borrower rewards. Borrower rewards don't usually apply until repayment, but if you can take advantage of them, you can save a little bit of cash through incentives such as reductions in interest rate or cash back in exchange for doing certain actions. Some examples would include signing up for paperless statements, one-time payments, or enrolling in auto debit programs from your loan servicer. Fees. Fees are an additional amount of money that cover origination cost as well as the potential for default. The loan fee is usually deducted from the loan disbursement. As a result, it is extremely important that the financial aid office submit the amount to the lender that includes this fee, so that way you pay the school the correct amount. Now, most schools are aware of this and the financial aid office will do this for you automatically, but it is something that you should keep your eye on just to be on the safe side. Borrowing limits. These are the limits to how much you can borrow from the federal government, both annually and over the course of your life. The actual amount that you can borrow depends on what year you are in school, because the idea is that the further along you get in your higher education process, the less likely you are to not graduate and then default on your loan. Disbursement policy. A student loan disbursement is the actual paying of the amount of the loan to the borrower, in this case, the student. Usually the payments are made directly to the school, at which point they cover all tuition and fees, and then any room and board that's payable to the school, and finally, if anything is left over, it is paid to the borrower to cover the cost of books and other things. If you live off campus, the school will take out your tuition and fees and then give you whatever is left over to pay for your living expenses. If you're a first-year student and a first-time borrower, there are usually more restrictions in place. Some examples include having a 30-day period until after enrollment has passed before you can withdraw excessive funds. There are a lot of private schools that offer the option for the money to go directly to the borrower. So in this case, it goes directly to the student and not to the school. Now, if this is your situation, you need to make sure that you are aware of all of the payment timelines for your school and that you set up your payments accordingly, because you don't want to be charged any fees for missing any due dates. Repayment policy. So this is the part of the agreement that really details how and when you are going to pay back the money that you borrowed. Now, typically student loans do not require you to repay any of the principal or the interest while you're in school, and most of them give you a 6-month grace period before the repayment will start. Federal student loan programs offer several different types of repayment options that typically range from 10 years up to 25 years. Now, whether you take out a federal loan or a private loan, it is really important that you look over this part of the contract very carefully so that you understand exactly what your repayment obligations are going to be after you graduate. All right, now that we have talked about the aspects of the loan agreement that you really need to pay close attention to, let's talk about the difference between federal loans and private loans. So you have the choice between federal student loans and private student loans. Federal student loans are issued by the U.S. government through the Department of Education. These loans are actually handled by federal loan servicing companies who are contracted by the Department of Education. Most student loans are federal student loans, and this is because usually the interest rates on federal loans are better for individuals because the interest rate is capped at a fixed rate that is set by Congress. So if your financial aid advisor tries to steer you away from federal loans, you should take that as a red flag. Federal loans can be subsidized or unsubsidized based on your financial need. There are actually several different types of federal student loans, but for the sake of time in this video, I'm not going to describe each one in detail. Now, if you are considering getting a student loan, I would strongly recommend that you go to the website studentaid.gov, which I'll also link below in the description. It's important for you to note that federal student loans require that the FAFSA be completed every single year. FAFSA stands for Free Application for Federal Student Aid. The good news is that this is an online form and that it is free to complete. The bad news is it can be a nightmare for some people. It can be really stressful and tedious, but it is what it is, so you just have to do what you need to do in order to complete it. The other thing that you should know is that many universities disperse their need-based aid based on the FAFSA, so the sooner you complete it, the better, because the sooner you complete it, the more likely it will be that you will have access to that aid. Then you have private student loans. So private student loans are issued from lenders such as banks. They typically don't offer as many perks as what you would find with the federal student loan, but sometimes they can offer lowest interest rates or other terms that would be appealing for certain types of borrowers. One of the big differences is that when you are applying for a private loan, you don't have to fill out the FAFSA. Instead, you treat this more as a traditional loan in which you have to fill out an application that is designed by the lender, and they're going to look at things like your borrowing history, your credit scores, and your overall likelihood to be able to repay the loan amount. Also, since this loan is going to a student who is typically a young person, a lot of lenders will require you to have a co-signer such as your parent. And in this case, the parent is equally responsible for paying back the loan as the student is. Now, if this is an option that you want to explore, please make sure that you take time to look at all of your options and choose the one that best suits your needs. All right, now I want to share with you another really big important point to consider when you are thinking about taking out a student loan, and that is that student loans are not always worth it. Before you take on such a huge obligation of debt in your life, it is really important that you do a return on investment calculation for yourself. And what this means is that you need to look at the type of career that you are going to be qualified for after you graduate. You need to look at the type of salary that you can expect to earn with that qualification. And then you need to take into account those student loan repayments every month. If you can, it is always better to try to work in school in order to pay for college and take on as little debt as you possibly can. So this is a really big, really important topic that I couldn't possibly cover comprehensively in a 15-minute YouTube video. So if you are thinking about getting a student loan, I strongly encourage you to do your own in-depth research. Now, Googling student loans is a great way to get started, and of course you'll find a lot of lovely articles and guides to help you online. But I want to give you a word of warning. Good SEO does not always mean a good, reliable source. There are a lot of pages out there that may have out-of-date information or business interests that could potentially steer you down the wrong direction. This is why I strongly encourage you to make your primary sources official US government websites. You can look for the label at the top of the page, just like this. All right, guys, that's it from me. I hope that you found this video useful. If you did, we would be super grateful if you would like the video, or better yet, subscribe to our channel. As always, we welcome your comments and your feedback. Remember, earn more, spend less, and invest the rest, and we'll see you next time.